Question 1. What is a characteristic feature of term life insurance that distinguishes it from whole life insurance? A. Term life insurance has a cash value component that accumulates over time. B. Term life insurance provides coverage for a specified period, while whole life insurance provides lifelong coverage. C. Term life insurance premiums are typically lower than those of whole life insurance for the same coverage amount. D. Term life insurance policies cannot be renewed after the initial term expires. Answer: B. Term life insurance provides coverage for a specified period, while whole life insurance provides lifelong coverage. Explanation: Term life insurance is designed to provide coverage for a predetermined period, such as 10, 20, or 30 years. If the insured dies within this period, the beneficiaries receive the death benefit. In contrast, whole life insurance remains in force for the insured's entire lifetime, provided premiums are paid and it accumulates cash value over time. This distinction is essential as it affects the policyholder's long-term financial planning and risk management. While option C is also true, term life insurance premiums are generally low due to the lack of a cash value component. It does not describe a defining characteristic. Options A and D are incorrect. Term life insurance does not accumulate cash value, and many term policies can be renewed. Question 2. Ava has a term life insurance policy that includes a renewability feature. If she decides to renew her policy after the initial term ends, which of the following statements is true regarding her premiums? A. Her premiums will be the same as they were during the initial term, regardless of her age. B. Her premiums may increase based on her current age and health status. C. Her premiums will decrease due to the renewal option. D. Her premiums will be waived if she decides to renew the policy. Answer: B. Her premiums may increase based on her current age and health status. Explanation: the renewability feature allows Ava to extend her coverage after the initial term without providing evidence of insurability. However, since premiums for term life insurance are based on the insured's age at the time of renewal, it is likely that they will increase, reflecting her current age and any changes in health status since the original policy was issued. This understanding is crucial for policyholders to plan financially for future coverage needs. Option is incorrect because premiums typically increase with age. Option C is misleading, as premiums do not decrease simply due to renewal. Option D is incorrect, as premiums are not waived, they must be paid for continued coverage. Question 3, scenario-based. Mr. Thompson is considering purchasing a term life insurance policy to provide financial security for his family in case of his untimely death. He has a pre-existing medical condition but is in stable condition and regularly sees a doctor for management. What should Mr. Thompson be aware of when applying for a term life insurance policy? A. His application will likely be denied due to his pre-existing medical condition. B. He should prepare to provide detailed medical information and may be subject to higher premiums. C. He can expect standard premiums because he is in stable condition. D. He does not need to disclose his medical condition if it is under control. Answer: B. He should prepare to provide detailed medical information and may be subject to higher premiums. Explanation: when applying for a term life insurance policy, insurers will assess Mr. Thompson's health status, including any pre-existing medical conditions. It's crucial for him to provide complete and accurate medical information, as this will impact the underwriting process. Insurers may require additional documentation or medical exams to evaluate the risk of insuring him, potentially resulting in higher premiums based on the risk associated with his medical condition. Option is not necessarily correct. While he may face scrutiny due to his condition, a denial is not guaranteed, especially if he can demonstrate stability. Option C is misleading since his medical history could lead to higher premiums. Option D is incorrect. Failing to disclose relevant medical information could lead to policy cancellation or claim denial in the future. Question 4. Which of the following best describes the difference between level term insurance and decreasing term insurance? A. Level term insurance provides a constant death benefit, while decreasing term insurance has a death benefit that declines over time. B. Level term insurance has lower premiums than decreasing term insurance. C. Decreasing term insurance is typically convertible to whole life insurance, while level term insurance is not. D. Level term insurance is only available for short terms compared to decreasing term insurance. Answer: A. Level term insurance provides a constant death benefit, while decreasing term insurance has a death benefit that declines over time. Explanation: level term insurance offers a fixed death benefit throughout the policy's term, ensuring that beneficiaries receive the same amount regardless of when the insured passes away within the coverage period. In contrast, decreasing term insurance has a death benefit that gradually decreases, usually designed to match a declining financial obligation, such as a mortgage. This feature makes option A the correct answer. Option B is incorrect. Decreasing term insurance generally has low premiums than level term insurance due to its decreasing coverage. Option C is misleading, as both types of term insurance can have conversion options depending on the specific policy. Option D is inaccurate since level term insurance can be offered in various term lengths. Question 5. Which statement about riders in a term life insurance policy is accurate? A. Riders can only add benefits but never modify existing ones. B. Riders can increase the death benefit but do not affect premiums. C. Riders such as a waiver of premium can protect policyholders from losing coverage due to financial hardship. D. All riders must be accepted by the insured before the policy can be issued. Answer. C. Riders such as a waiver of premium can protect policyholders from losing coverage due to financial hardship. Explanation. Riders are additional provisions that can be added to a life insurance policy to enhance coverage. For instance, a waiver of premium rider allows the insured to stop paying premiums if they become disabled, thus preventing policy lapses during times of financial difficulty. This makes option C correct. Option is incorrect as some riders can modify existing benefits. G. Adding an accidental death benefit rider can change how the death benefit is paid. Option B is also false. Riders typically increase premiums as they provide additional benefits. Option D is misleading and not all riders need to be accepted prior to policy issuance, as some can be added later or at the time of renewal. Question 6. In the context of the claims process, which of the following is generally a requirement for beneficiaries when filing a claim for a death benefit? A. Providing proof of the insured's medical history. B. Completing the claim form and submitting the death certificate. C. Making premium payments for the policy up to the date of the claim. D. Filing a claim within 30 days of the insured's death. Answer. B. Completing the claim form and submitting the death certificate. Explanation. When a beneficiary files a claim for the death benefit, they typically need to provide the completed claim form along with the insured's death certificate. This documentation serves as proof of death and initiates the claims process. Therefore, option B is the correct answer. Option is incorrect. While the insurer may access the insured's medical history, beneficiaries are not usually required to provide it. Option C is misleading. While premiums should be paid to keep the policy active, the requirement for submitting a claim is primarily focused on the completion of necessary documentation. Option D is inaccurate, as claim submission timeframes can vary. Insurers usually allow a reasonable period after the death for claims to be filed. Question 7. What is the significance of insurable interest in life insurance contracts, and how does it affect the validity of a policy? A. Insurable interest ensures that the policyholder benefits financially from the insured's death. B. Insurable interest is only necessary at the time of policy issuance and not during the claim. C. Insurable interest allows anyone to take a life insurance policy on any individual without restrictions. D. Insurable interest is a requirement that helps prevent insurance fraud and ensures contractual validity. Answer. D. Insurable interest is a requirement that helps prevent insurance fraud and ensures contractual validity. Explanation. Insurable interest is a crucial legal principle in life insurance that mandates that the policyholder must have a legitimate interest in the continued life of the insured at the time the policy is issued. This requirement helps to prevent insurance fraud, ensuring that individuals do not take out policies on strangers or those with whom they have no meaningful relationship. Thus, option D is the correct answer. Option is misleading. While having insurable interest means that the policyholder stands to lose financially upon the death of the insured, it does not mean they benefit in an unethical manner. Option B is incorrect. Insurable interest must exist both at the inception of the policy and at the time of the insured's death for the claim to be valid. Option C is false. Insurable interest limits the ability to insure someone to those with whom the policyholder has a legitimate relationship. Question 8. Which factor is not typically considered in the underwriting process for a term life insurance policy? A. The insured's smoking status. B. The insured's occupation and hobbies. C. The insured's income level. D. The insured's family medical history. Answer. C. The insured's income level. Explanation. Underwriting for term life insurance focuses on assessing risk based on various factors that might affect the likelihood of a claim being made. Typically, insurers evaluate the insured's smoking status, occupation, especially if it is hazardous, hobbies such as skydiving or scuba diving, and family medical history to gauge potential health risks. However, while income may play a role in determining the appropriate amount of coverage, it is not a direct factor in assessing risk for underwriting purposes, making option C the correct answer. Options A, B, and D are all factors that can significantly impact the underwriting decision. Question 9. What is the primary tax implication of receiving a death benefit from a term life insurance policy? A. The death benefit is subject to income tax for the beneficiaries. B. The death benefit is considered a gift and may be subject to gift tax. C. The death benefit is generally received income tax-free by the beneficiaries. D. The death benefit will reduce the taxable estate of the insured. Answer: C. The death benefit is generally received income tax-free by the beneficiaries. Explanation: in most cases, the death benefit paid from a term life insurance policy is not subject to federal income tax for the beneficiaries. This tax advantage makes life insurance an appealing component of financial planning and estate management. Therefore, option C is the correct answer. Option is incorrect. Beneficiaries do not pay income tax on the death benefit. Option B is misleading. While there are gift tax considerations for transferring ownership of a policy, the death benefit itself is not taxed as a gift when paid to beneficiaries. Option D is inaccurate. The death benefit does not directly reduce the insured's taxable estate, however, it can influence overall estate planning. Question 10. Which of the following statements about converting a term life insurance policy to a permanent policy is true? A. Conversion is always allowed without additional underwriting. B. A conversion can typically only occur during the policy's initial term. C. The premiums for the new permanent policy will be based on the insured's age at the time of conversion. D. Conversion is available only for policies with a cash value component. Answer: C. The premiums for the new permanent policy will be based on the insured's age at the time of conversion. Explanation: most term life insurance policies with a conversion option allow the insured to switch to a permanent policy without undergoing a new medical examination. However, the premiums for the new policy will be determined based on the insured's current age at the time of conversion, which may result in higher premiums compared to the initial term policy. Thus, option C is the correct answer. Option is misleading. While conversion is typically allowed, it may not always be granted without any underwriting if the insured has developed health issues. Option B is incorrect. Conversion can often occur after the initial term, depending on the policy terms. Option D is false. Conversion options do not depend on having a cash value component, as term policies generally do not accumulate cash value. Question 11. In Virginia, what is the primary purpose of the free look provision in a life insurance policy? A. To allow policyholders to cancel that policy at any time without a penalty. B. To provide a trial period during which the policyholder can review the policy and receive a full refund if cancelled. C. To ensure that the insurance company can deny claims based on misrepresentation within the first year. D. To enable policyholders to convert their term policy to a permanent policy without additional charges. Answer: B. To provide a trial period during which the policyholder can review the policy and receive a full refund if cancelled. Explanation: the free look provision allows policyholders a specified period, usually 10 days in Virginia, to review their new policy. If they are not satisfied, they can cancel it and receive a full refund of premiums paid. This provision aims to protect consumers by ensuring they fully understand the policy terms before committing financially. Therefore, option B is correct. Option is incorrect because while cancellation is possible, it typically involves the free look period rather than any time. Option C is misleading. Misrepresentation can lead to claim denial, but the free look provision primarily concerns the policy review. Option D is false. Conversion options are separate from the free look provision. Question 12. Which of the following best defines the term beneficiary life insurance policy? A. The person who owns the policy and pays the premiums. B. The individual or entity designated to receive the death benefit upon the insured's death. C. The insurance company that issues the policy. D. The individual responsible for underwriting the policy. Answer: B. The individual or entity designated to receive the death benefit upon the insured's death. Explanation: a beneficiary is specifically identified in a life insurance policy to receive the death benefit when the insured passes away. This can be an individual, such as a spouse or child, or an entity, such as a trust or charity. Thus, option B is correct. Option A is incorrect. The policyholder is the one who owns the policy and pays premiums, but is not necessarily the beneficiary. Option C is inaccurate. The insurance company is the issuer, not the recipient of benefits. Option D is misleading. The underwriter assesses risk but is not involved in the benefit distribution. Question 13. When evaluating the underwriting process for term life insurance, which of the following factors is considered the least significant? A. The applicant's age. B. The applicant's credit history. C. The applicant's health status. D. The applicant's lifestyle choices. Answer: B. The applicant's credit history. Explanation: in underwriting for term life insurance, the most critical factors typically include the applicant's age, health status, and lifestyle choices, e.g., smoking or risky hobbies. While credit history may provide insight into financial responsibility, it generally has minimal direct impact on life insurance underwriting. Therefore, option B is the correct answer. Options A, C, and D are all significant factors affecting underwriting decisions. Question 14. Which of the following is not a typical characteristic of term life insurance? A. Coverage for a specified period. B. Cash value accumulation over time. C. Lower initial premiums compared to permanent policies. D. Renewable and convertible options. Answer: B. Cash value accumulation over time. Explanation: term life insurance is designed to provide coverage for a specific period, e.g., 10, 20, or 30 years, and typically does not accumulate cash value like whole life or universal life policies do. Therefore, option B is correct. Options A, C, and D accurately describe characteristics of term life insurance, as it usually has lower initial premiums and may include renewal and conversion options. Question 15. Which of the following statements regarding the claims process for a life insurance policy is true? A. Claims must be filed within 6 months of the insured's death. B. The insurer has the right to investigate the claim indefinitely. C. Beneficiaries are required to provide evidence of insurable interest when filing a claim. D. Claims can be denied if the premiums were not paid up to the date of the insured's death. Answer: D. Claims can be denied if the premiums were not paid up to the date of the insured's death. Explanation: life insurance claims can be denied if the policy was not in force at the time of death, which typically occurs if premiums are not paid. Therefore, option D is correct. Option A is misleading, as the time frame for filing claims can vary and is often longer than 6 months. Option B is inaccurate. While insurers can investigate claims, there are typically regulations that limit the duration of this investigation. Option C is false. Beneficiaries are not required to demonstrate insurable interest after the insured's death to receive the death benefit. Question 16. Which of the following is a primary benefit of having a term life insurance policy that includes a conversion option? A. It allows policyholders to switch to a whole life policy without any additional cost. B. It guarantees the same premiums for the new policy as the original term policy. C. It enables policyholders to obtain permanent coverage without undergoing a new medical examination. D. It allows policyholders to increase the death benefit without any medical underwriting. Answer: C. It enables policyholders to obtain permanent coverage without undergoing a new medical examination. Explanation: a conversion option in a term life insurance policy allows the policyholder to switch to a permanent policy, often without having to provide new medical information or undergo further underwriting, which can be beneficial if the insured's health has declined. Thus, option C is correct. Option A is incorrect. While conversion may not require additional underwriting, there may be costs associated with the new policy. Option B is misleading, as premiums for the new policy are based on the insured's current age. Option D is false. Increasing the death benefit may still require underwriting, depending on the terms of the policy. Question 17. What does the grace period ECA life insurance policy refer to? A. A time frame allowing the insured to convert the policy to a permanent one without penalty. B. A period during which premiums can be paid without the risk of policy lapse. C. A duration within which beneficiaries can file a claim for death benefits after the insured's passing. D. A time limit for the insurer to process and pay out claims once filed. Answer: B. A period during which premiums can be paid without the risk of policy lapse. Explanation: the grace period is a provision that allows policyholders to pay their premiums after the due date without losing coverage, typically lasting 30 days. This period ensures that a policy does not lapse immediately upon a missed payment. Therefore, option B is correct. Option A describes a conversion option, not the grace period. Option C inaccurately describes claim filing, and while there may be a time limit for claims, it is not defined as a grace period. Option D is misleading. There are no formal grace periods for processing claims. Question 18. Under Virginia law, which of the following constitutes misrepresentation in a life insurance application? A. Failing to disclose a previous hospitalization. B. Providing inaccurate information about income. C. Omitting a non-life threatening medical condition. D. Including a correct statement about smoking status. Answer 8. Failing to disclose a previous hospitalization. Explanation. Misrepresentation occurs when an applicant provides false information or omits crucial information that could affect underwriting decisions. Failing to disclose a previous hospitalization is significant because it could directly impact the assessment of risk by the insurer. Therefore, option A is correct. Option B is misleading, and while inaccuracies about income can have implications, they are less critical than health disclosures. Option C is incorrect. Omitting a non-life-threatening condition may not always be considered misrepresentation, depending on its relevance. Option D is irrelevant, as including accurate information cannot be misrepresentation. Question 19. If a term life insurance policy is renewed, which of the following is typically true about the new policy? A. The premiums remain the same as the original policy. B. The death benefit is automatically increased. C. The premiums will likely be higher due to the insured's increased age. D. The new policy may have different terms that require a new application process. Answer C. The premiums will likely be higher due to the insured's increased age. Explanation. When a term life insurance policy is renewed, premiums typically increase because they are recalculated based on the insured's current age, which represents a higher risk for the insurer. Therefore, option C is correct. Option A is incorrect. Premiums usually do not remain the same upon renewal. Option B is misleading, and while some policies may allow for increased benefits, this is not automatically applied upon renewal. Option D is also incorrect. While terms can change, a renewal usually does not require a new application process unless specified in the policy. Question 20. Which of the following correctly describes a term rider ICA life insurance policy? A. It allows the insured to add term coverage for a limited time to an existing permanent policy. B. It enables the policyholder to reduce the death benefit of a permanent policy. C. It is a rider that guarantees premium refunds if the insured survives the term. D. It permits the conversion of term insurance into a whole life policy at any time. Answer A. It allows the insured to add term coverage for a limited time to an existing permanent policy. Explanation. A term rider is an addition to a permanent life insurance policy that provides additional term life coverage for a specific period, usually at a lower cost than purchasing a separate term policy. This option is beneficial for those who may need temporary coverage, such as during a time of increased financial responsibility, e.g., raising children or paying off a mortgage. Therefore, option A is correct. Option B is incorrect. A term rider does not allow for a reduction in the death benefit of the permanent policy. Option C describes a return of premium rider, not a term rider, as term riders generally do not provide refunds. Option D is misleading. Term insurance typically cannot be converted to whole life insurance without specific provisions in the policy. Question 21. What is the primary purpose of the convertibility feature in a term life insurance policy? A. To allow the policyholder to switch to a different insurance provider. B. To enable the policyholder to convert the term policy into a permanent policy without undergoing additional underwriting. C. To increase the coverage amount of the policy at the end of the term. D. To guarantee a refund of premiums paid if the insured does not pass away during the term. Answer B. To enable the policyholder to convert the term policy into a permanent policy without undergoing additional underwriting. Explanation. The convertibility feature allows the insured to convert their term policy into a permanent policy such as whole life or universal life without the need for further medical underwriting. This is important for policyholders who may develop health issues during the term but still wish to maintain life insurance coverage. Option is incorrect. If switching providers typically requires a new application and underwriting. Option C misrepresents the function of convertibility. It does not inherently increase coverage amounts. Option D refers to a return of premium feature, not convertibility. Question 22. Which of the following best describes the grace period of ICA life insurance policy? A. The time allowed for the policyholder to review their policy before it goes into effect. B. The period after a premium due date during which coverage remains in force despite non-payment. C. The time period in which a claim must be filed after the insured's death. D. The duration of time before the policy can be converted from term to permanent coverage. Answer: B. The period after premium due date during which coverage remains in force despite non-payment. Explanation: a grace period is typically 30 days, allowing the policyholder time to pay the premium after it is due without losing coverage. If the premium is not paid within this period, the policy may lapse. Option is incorrect. There is no review period as described. Option C inaccurately defines a grace period as it pertains to claims. Option D does not correctly represent any feature related to grace periods in life insurance policies. Question 23. Scenario: Mr. Thompson recently purchased a term life insurance policy with a level death benefit for 20 years. He is considering adding a rider for accidental death benefits. Which of the following statements is true regarding this decision? A. The rider will significantly increase his premium but provide additional benefits in the case of accidental death. B. The rider will allow him to convert his term policy into a permanent one at any time during the term. C. Adding the rider will eliminate the need for a medical exam in the future. D. The accidental death benefit rider pays the same amount as the base policy in case of accidental death. Answer A. The rider will significantly increase his premium but provide additional benefits in the case of accidental death. Explanation: accidental death benefit riders provide an additional death benefit if the insured dies as a result of an accident, typically at an additional cost to the premium. Option B is incorrect. A rider does not provide conversion rights. Option C is false. Adding a rider does not typically affect medical underwriting requirements for the base policy. Option D is misleading. The rider usually pays an additional benefit beyond the base policy amount in case of accidental death. Question 24. What factor is least likely to affect the premium rates for a term life insurance policy? A. The insured's occupation and lifestyle habits. B. The presence of a pre-existing medical condition. C. The insured's family history of chronic diseases. D. The length of the insurance application process. Answer: D. The length of the insurance application process. Explanation: premium rates for term life insurance are primarily determined by the insured's risk factors, such as health, lifestyle, occupation, and family medical history. The length of the application process does not influence the rates, making option D the correct answer. Options A, B, and C all contribute to the assessment of risk and therefore impact premium rates. Question 25. Which of the following statements is true regarding the underwriting process for a term life insurance policy? A. Underwriting is only necessary for permanent life insurance policies, not term policies. B. Insurers may use information from a medical exam, prescription history, and lifestyle questionnaires to assess risk. C. The underwriting decision is made solely based on the applicant's age. D. Underwriting guarantees that the insured will receive the lowest premium available. Answer: B. Insurers may use information from a medical exam, prescription history, and lifestyle questionnaires to assess risk. Explanation: underwriting is a critical component in determining the risk associated with insuring an applicant and applies to both term and permanent life insurance policies. Insurers evaluate various factors, including medical history, lifestyle choices, and possibly a medical exam to set premium rates. Option A is incorrect. Underwriting is essential for all policy types. Option C oversimplifies the underwriting process. Age is only one of many factors. Option D is false. Underwriting does not guarantee the lowest premium. It aims to assess risk accurately. Question 26. In the context of Virginia state insurance laws, what is a mandatory provision that must be included in all life insurance policies? A. An explicit return of premium clause. B. A waiver of premium benefit for total disability. C. A provision for grace periods. D. A clause specifying the exact premium amounts due. Answer: C. A provision for grace periods. Explanation: Virginia law requires life insurance policies to contain a grace period provision allowing policyholders time to pay overdue premiums without losing coverage. Option A is incorrect as a return of premium clause is not mandatory. Option B, while beneficial, is not required in all policies. Option D is misleading. While premium amounts must be disclosed, the specific amounts can vary based on the insured's risk profile. Question 27. What is the primary tax advantage associated with death benefits paid out from a life insurance policy? A. Death benefits are considered taxable income to the beneficiary. B. Death benefits are typically exempt from federal income tax. C. Death benefits are included in the insured's gross estate for estate tax purposes. D. Death benefits can only be used to pay off estate taxes. Answer: B. Death benefits are typically exempt from federal income tax. Explanation: generally, the death benefits paid from a life insurance policy to beneficiaries are not subject to federal income tax, providing a significant tax advantage to policyholders. Option A is incorrect. Beneficiaries do not pay income tax on these proceeds. Option C is partially true, as death benefits may be included in the estate if the insured has certain ownership rights, but this does not negate the tax-exempt status of the benefits. Option D is misleading. Death benefits are not restricted to paying estate taxes. Question 28. Which of the following best describes the term beneficiary ECA life insurance policy? A. The entity responsible for paying the premiums on the policy. B. The individual or entity designated to receive the death benefit upon the insured's death. C. The insurance company providing the coverage. D. The insured individual who is covered by the policy. Answer: B. The individual or entity designated to receive the death benefit upon the insured's death. Explanation: a beneficiary is specifically named in a life insurance policy to receive the death benefit upon the insured's passing. Option A refers to the policyholder rather than the beneficiary. Option C misidentifies the insurer as the beneficiary, which is incorrect. Option D describes the insured but does not relate to the benefits recipient. Question 29. Scenario: Mrs. Kelly, a 40-year-old non-smoker, is applying for a 20-year term life insurance policy. She has a family history of heart disease. How might her family medical history influence her application process? A. It will likely have no impact on her application since she is a non-smoker. B. It could lead to a higher premium due to perceived increased risk. C. It may allow her to secure a lower premium because she is aware of her family history. D. It will disqualify her from receiving any life insurance coverage. Answer: B. It could lead to a higher premium due to perceived increased risk. Explanation: family medical history can significantly impact the underwriting process as insurers assess the likelihood of future health issues. In Mrs. Kelly's case, the presence of heart disease in her family may lead underwriters to perceive her as a higher risk, potentially resulting in higher premiums. Option A is incorrect. Her non-smoking status does not negate the risks associated with family history. Option C misunderstands how family history typically affects premiums. Option D is inaccurate. While family history may influence the terms, it generally does not lead to outright disqualification unless there are serious health issues present. Question 30. Which of the following best defines level term life insurance? A. A policy where premiums increase each year based on the insured's age. B. A policy that provides a fixed death benefit for a specified term. C. A policy that combines investment features with life coverage. D. A policy with fluctuating premiums based on market performance. Answer: B. A policy that provides a fixed death benefit for a specified term. Explanation: level term life insurance offers a fixed death benefit amount throughout the term of the policy, meaning that the coverage remains constant and premiums typically do not change. Option A describes increasing term insurance, while Option C refers to whole or universal life policies. Option D misrepresents level term insurance as having investment components.